Jamie here, Thursday, March 27th, 322 on this fine afternoon. Talk really quick about the market, some names I'm looking at, go from there. S&P fighting, just went back into the green here. Another rocky session, except instead of it just being straight to the downside like yesterday outside the bounce in the late afternoon, today there was a bid at about 9:45. We hit lows, yeah, 9:45, bounced to highs by about 11, and then we've kind of been chopping ever since. It almost looked like we might revisit the lows before finding support here at 2 o'clock. And now the S&P, the SPY is testing that 200-day moving average. I think it would be a big deal if it's able to close above that. Not only that, I mean, we have PCE data, which can certainly put a kink in the market's plans tomorrow. But overall, I mean, not too bad action considering it just, unfortunately, it's tough to get trends on the names I like to trade because, I mean, who knows what tomorrow brings. And then some of these names that I thought were ready to break out, whether they're consolidating or it's processing the losses before the next leg to the downside. I hope that's not the case, but can't rule that out either. But either way, right now VIX down 1.5%. I kind of made a little joke. I made it's it seems like there's always new headwinds, right? The market's always been able to climb the proverbial wall of worry, whether it be geopolitical situations, Euro debt zone crisis, Greece, Italy. I mean, who remembers when those countries are going bankrupt? Uh, there's been so many of these little catalysts. I wouldn't call them little. The Japan tsunami years ago. I mean, I can't even think of all the names right now off the top of my head. Back in 2011 was the first U.S. debt downgrade. That was S&P. I think it was the summer, and stocks just got pummeled. Some of it is because it came out of left field. I don't think people were expecting that. Uh, and then, so that was Standards and Poor's, and I guess is it Fitch is the other one. I think they took the U.S. debt down a notch, and I think there's like one last rating agency because I think there's only three rating agencies that's responsible for the U.S. debt, and the next one's Moody's. And Moody's already put the U.S. debt rating on warning, right? Their outlook from I guess from stable to I forget exactly the wording, but what did they do? Of course I'm trying to yeah, why is this? They just lowered their outlook to negative, right? So then, a lot of this has to do with the US having issues in regards to the debt ceiling. When it comes to concerns like that, the Congress said that they can't pass deals to raise the limit, right? And then obviously a percentage of the U.S. GDP to its debt continues to increase. With the U.S. defense spending just got passed by U.S. interest payments just on the debt, right? So I mean, there's a lot of reasons at work, but I mean, the U.S. has never defaulted on their debt, so you always have that as a backstop. It's almost somewhat it's a little comical. I mean, fast forward 30 years, and if we've this kick the can down the road in regards to U.S. debt thing has been going on for decades, right? And we keep kicking the debt down the road. I mean, when it becomes debt is 150% of GDP, or let's say the U.S. growth starts to slow, the population declines, productivity declines. There's a lot of these reasons, but anyway, rants for other days. I don't have too much time here, but I just made that little meme because that you have to think that's the next headline. There was already a little report this morning. I saw some news last week. I think Barron's is talking about it as one of their surprises for 2025 that at some point the last credit rating agency standing in regards to having a sterling debt rating on U.S. debt will finally throw in a towel and downgrade the debt. I don't know how much of an impact because I think some of that won't be out of left field, but it's just like another notch in the market's wall of worry. And whether we climb it or not, I guess that'll be the big question. But hopefully this tariff situation gets itself worked out. Tomorrow we have PCE data. So, I don't, I'm sure I'm hoping for an inline number. It would be nice to get a cooler than expected number. Higher than expected number probably won't be reacted too well. I still think we'll hold that 563. The consumer confidence number, Tuesday, you would think that would have like that should have that to me that was more important than inflate the PC data on Friday because that has been trending in the wrong direction and it came out worse than expected and markets were still able to kind of find footing. So I think that was probably the bigger data piece this week as opposed to PC data, unless PC data severely surprises. But anyway, so you take a look at the SPY, the 200-day moving average 570.67. We're at 569.76. We need a 33-minute stick save. If we can get over that, I think that bodes well because I was concerned about the lower lows, lower highs, lower lows that was setting up a couple months back. Now I worry about the bear flag, right? So don't want that setting up if we continue to consolidate here, because then, and once we break 563, then I think that'll be some concern. Other thing to note, the VIX is in the red now, down 1%. So despite the bumpiness today, 564 to 570, almost 571 in a matter of an hour. So uh, we were 0.45% of 0.45% trading range on Tuesday, 1.4, 1.5% yes. Actually, I think it was 1.6 yesterday. And then this morning we had Tuesday's trading range within less than an hour. So it's funny how that all works. But again, I think that bodes well with the VIX, and maybe we find some footing here tomorrow into the weekend. Next week will probably be bumpy again, right? I mean, I'm sure there's surprise announcements in regards to the tariffs. You already have some reaction. I was looking at Ferrari this morning just because that's one of those names that you would think would have sold off more than it did, and it didn't. And then it started to bounce in the morning. I said, I was looking at calls, but it only has April strikes. Liquidity's not there. They announced some price raises. Who knows if that even impacts their business too much. All right, rants for other days. And then last but not least, the amount of stock trading over there, 200-day moving out of the S&P down 3%. So a couple names drop below that 200-day moving average. Hopefully they start to recoup it. All right, so now individual names. So first, I'll talk about GameStop here. Just I'm surprised. Well, I wouldn't say I'm surprised, but I mean the stock opened in the red, was about 26 or so, and then it just started taking it on the chin, all the way down to 21 bucks. I think did it hit 21.16, and now starting to bounce, still down 22% on a day. You have some folks out there. I think uh, Kramer talked about it too. I guess because their offering is no interest, right? So it's a note with no interest. So pretty much it's convertible notes. So you convert them into shares. So it's dilution, but it doesn't pay interest. So if you're someone who buys that, and who knows if there'll be enough demand for the $1.3 billion worth, typically what some of these folks do, especially on a name that might, has financial issues, they short the stock, right? Because they're getting paid a nice interest. They're going to get shares too. But if the stock falls, you convert to shares, and then that covers your shares, right? So kind of like protects yourself. So the thing is that the GameStop convertible is not interest bearing, right? So unless you think the company's going bankrupt, and they have $4.7 billion in cash, no debt, so, or minimal, it's like 80 million, but I think it's a credit line. It doesn't make that case doesn't make sense. And Kramer said that that's the don't they're going to sell it, but people don't know anything, and they're going to short the stock. I don't know if that's some of it. Maybe people are disappointed. And now you take a look at the Wedbush analyst who came out and said that it was over $5 overvalued, just based on comparison with which MSTR, which trades 2.5 times their crypto holdings, their Bitcoin holdings. So if you're using that as the standard of what a company that just uses Bitcoin as a reserve asset for their treasury asset or what have you, um, GameStop has more to it, right? And I was saying that this morning, the $220 million in interest income last year. I mean, that's going to go away unless they're just going to keep that as a possible part of the cash cow, and also just keep doing offerings and using that to buy the crypto. We'll see what happens. But needless to say, I was looking at the calls at the open. My calls weren't too bad. Then they were pretty much cut in half by mid-afternoon, and they've started to come back. And I was actually looking for May strikes, but they're kind of pricey. The spreads are wide, and to me, it's like the risk reward. So like I can go out and get the 45 Mays. They're 46 by 59, but I have to. But if it bounces, my April 40s are going to be fine. And I mean, before they were down just like 20. Depending on the bid ask, but they're 26 by 36. I got them at 49. They were green yesterday, but I already locked in 100% yesterday, and it was 35. So I use that to kind of finance some of the 40s. So I'll just hold them. We'll see how things play out over the next couple of days. I don't know if I'll add more just yet, but I could see it be a name that gets some steam and just starts to rally. So, all right, so that's GameStop. Disappointed to see it pull here. I'm just, I guess, thankful I didn't add calls at the open, but at some point maybe I'll look for some more strikes. I did get calls on Baidu. I mean, it's been a while since he's slow and steady to the upside on Baidu. Almost looked like it was ready to break out into the 99s in the morning. Gave some of it back. Was treading into the afternoon. Then found some footing. Hopefully a late day surge here. Again, I think what's going on in China and the U.S., I think the relations are kind of thawing a little bit, and I think that just bodes well for the China ADRs. So that's Baidu. What else do I have on here? I keep looking at Dell, and I almost added the 105s earlier. I think they were like 35 cents. But I still have the 110s for next week. And why don't I have this up here? I don't know why I don't have this up here. Like I was saying on the watch this morning, it just needs a catalyst or a kick to really get going. But at the same token, it doesn't make sense for me to put more risk on if PC data shakes the markets tomorrow. And I already have the 110s for next week, which are solidly in the red. But I mean, it's not going to take much. It gets back over $100 tomorrow. The 110s will be back to life. So really love this Dell setup. Again, the 50-day moving average at 104. The gap fill from the end of February, 107.85 or so. I mean, maybe I'll be wrong, but I just have this feeling it's going to start to break out if the market cooperates. And then just a couple other names. Still looking to get back on Roku after closing the calls on Monday. Another analyst out this morning, was it UBS or Bank of America, saying that they're well positioned to monetize their user base. Nice little piece in Barron's. Well, Barron's Market Watch, that whole conglomerate, all in the same people. Same Wall Street Journal, Market Watch, Barron's, all the same folks. But nice little piece there. And then they give a little shout out to Needham. So um, I thought there'd be more follow through here on Roku today, maybe tomorrow. So depending on what the market does tomorrow, maybe that's finally I'll get back in the Roku strikes like I did last week. Um, an original, I call it the OG name, OLED. I used to trade this a lot back in the day. I mean, it's been a while since I've traded, but it's another name, no debt. I think they have 800 million in cash, and it's just been churning, and it hasn't been doing much. And then you look at the trading range since the end of February, wide ranges, now tighter, and today's like a doji candle. So typically when you see a doji candle, it's like indecisiveness. But to me, I'm ready to get some calls at some point, but I got to wait for this market to start cooperating. But a name I'm going to be putting back on the watch list. Other names, and I was talking about the difficulty finding hedge trades when the market was finding weakness yesterday. But here it is, Visa again up 1.7%. This is despite the weaker than expected consumer confidence, just surprising. So that's been a tough one. Another put hedge possibility I was looking at earlier today, ASML, right? I mean, it's a name I haven't traded much over the last couple of weeks, but I mean, it was 730 earlier this week, and that it broke under $700. You start looking at its lows back at the start of March around 675, 680. So it could be one if PC data comes weaker than expected tomorrow. If there's carnage, blood on the street tomorrow, maybe that's a name I'll look to get some puts hedge. And then the other side here too is I was possibly looking to get FAS calls, but possibly in lieu of doing that, maybe I'll look to get FAS puts. So that might make more sense, a little more volatile. And I think that's it, folks. Look at Dell taking off. So it was down to under 95 at about 145. It's up 98.25 right now, up 2%. So nice reversal for Dell. It might get over 100 in the next 25 minutes. That's it, folks. Let's have a great day. I'll be back. Rock and roll.